All right, we're back live on our YouTube show. Welcome back, everybody. We apologize for the technical difficulty that we had with sound. Hopefully we found a fix and you guys can hear us.
Right.
So just like we were saying, and I know none of what we spoke earlier.
Actually, people heard. No one heard it.
Nobody heard it. So
here
we go. So tonight we're going to talk about the main topic is real estate, recession, landlording, and also the HELOC strategy. And we're hoping to continue that conversation from last week. Yeah. And last week we also had technical difficulties, so we apologize for what's going on. But I digress.
Today we had, honestly, we had a full day of shooting, and we switched the format so many times, and we went from filming a video to a podcast to doing this. So it was an all day. So a lot of equipment got mixed around. But hey, how about we give a virtual round of applause to Sam for putting all the audio stuff together.
It wasn't me. It just wasn't me. I mean, I planned everything to be perfect, but when things are planned like this, it doesn't go perfectly.
Well, it's like real estate. Things don't go as planned. It's like a real estate deal. So, as Sam said, we're talking about recession stuff. We're talking about economics, what's happening out there in the market. We're talking about real estate, the HELOC strategy, and any questions that you guys really have. So again, I just want to make sure that we're all good. Can you guys hear us okay? Is audio looking good?
Yeah, audio sounds great. If you guys can give us a thumbs up or yes, sounds great. Whatever comments you guys can provide down below, it would help us a lot. Now, before we get to the show, again, we're going to talk about recession. We're going to talk about real estate, the economy, HELOC strategy, landlording. I know a lot of you landlords are panicking right now because of inability to collect rent, and some of your tenants may already said, "Hey, I can't pay rent." So we're going to talk about all the solutions. We're going to talk about the current events, what's going on. What is happening? We're going to talk all about that. Yeah. So before we get to the show, do subscribe to our YouTube channel. We're going to talk a lot about these topics I just mentioned. If you guys want to get more live updates as far as what the economy is doing, be sure to subscribe. So let's go ahead and get this started. The night we've been waiting for, we've been anticipating this. You guys can go ahead and shoot down the comments below, and we will do our best to answer all the questions that we get in order. And sometimes, people will throw comments or feedback, and sometimes we miss questions. So we're going to do our best to make sure we catch all the questions as they come through.
And also, guys, when you do ask your questions, we do this a lot, right? So if you guys could be clear and specific, because we know a lot of the questions that you guys ask are very specific to your guys' situation.
Yeah.
So I've got both of us got the laptop. We see the questions. I got my phone here just in case it's it's hard to look at, right? So we'll be as specific as you possibly can. Feel free to put in details. So we're here for you guys. And you know what? Since we started at 7:10, right? Because we did have some technical difficulties. We'll go to a little after 8. How about that?
Yeah.
Right? Let's do it. Let's go to like 8:05, 8:10. We don't want to cheat you guys, right? And so we want to have a good time. We want to answer your guys' questions. So it looks like we got our first one. Right. So go ahead and read it off, Sam.
Yeah. So the first one looks like any word if the all-in loan will be suspended like most other non-QM loans have been recently. Perhaps it depends on how bad things get over the next few weeks and summer. So this is from Juan Gelt. I'm hoping I'm saying your name correctly. So Juan, yes, non-QM loans are being suspended left and right now. And I'm going to be real transparent and honest. And that also could be the all-in loan. Now, what does suspended mean? Well, suspended means that it's not like gone and forever. And here's why the non-QM loans are being suspended right now. If you guys understand how the mortgage market works, when a non-QM loan is issued and originated, and non-QM, by the way, for those who don't know what that means, it's non-qualifying mortgages. So what non-qualifying mortgages happen when they are issued. So if Daniel is a borrower, as a bank, I lend him money for the non-QM loan, which is the all-in loan. Oftentimes, a lot of the first lien position HELOCs fall in that category. What happens as a bank, I'm going to go and turn around and sell it to hedge fund companies. I'm going to sell it to the secondary market, sell it to Wall Street. It also gets packaged in securitized fashion, mortgage-backed securities. So what happens is the market's scared right now. Hedge fund companies are scared right now. And what happens is they stopped buying these types of non-QM loans. So what happens is because these investors and hedge fund and Wall Street stopped buying, these banks are like, oh my gosh, like no one's buying our non-QM loans right now, so we have to suspend it, right? If I'm selling chicken eggs and no one wants to buy chicken eggs, why do I continue selling chicken eggs, right? So it's that same concept. Now, it's more temporary. It's not gone. Okay. It might be gone for maybe 1 or 2 months, and we'll be back. It's more so right now. The market is scared. There's a lot of uncertainty, which Daniel will talk about that in just one sec. But there are other alternative as far as using a HELOC to pay down your mortgage. You can still get second lien position HELOCs. You can still go and get personal line of credit, business line of credit. Although much of the loan application process right now has been slowed down. So is it suspended? Yes, there's a lot of suspension that's going on right now. I'm being dead honest. I wish I can tell you it's not being suspended. Sometimes some of the banks are still taking an application. It's just, again, slow. So again, doesn't mean that's gone. It doesn't mean that they stopped completely. They're just taking a pause because right now the market is doing something that, it's volatile. It's very uncertain, and a lot of people don't know what's going on. So,
all right, next question.
Yep.
We got Dennis Miskowski.
Yeah, repetition.
Asking, how did everyone handle getting their tenants to pay rent during this time? So we actually did a video on it today. So I had one of my very good friends, Mr. Michael Conrad. What's great about him is he's been a landlord and a real estate attorney for the last 25 years. So he's done both. So we actually just created a video on, hey, what are the legal implications and what's the legal, kind of the atmosphere, what's going on when it comes to, tenants and landlords. And, one of the things that he says, the most important thing is communication, right? You've got to communicate. Now, in terms of tenants paying rent, I mean, we haven't felt anything yet just because it's not April 1st. You know what I mean? So if anybody, if there's any, if we have any landlords on right now, right, we've got about 40, 50 people on. And you guys are landlords, feel free to put in the chat box, right? Because we're only, at the end of the day, we're only 2 people, right? We're only 2 people and we have, a portfolio. But there's, 40 plus of you guys in the chat box right now that's watching this. If you guys have units and you guys have rental properties, feel free to type in the chat box and answer Dennis's question. Let's move on to the next one. Looks like it's a HELOC one. So go ahead, Sam.
Jeanette, it's in Barnachi. I hope I'm saying your name, Jeanette, correctly. How do I get a HELOC on a rental that I've had rented out less than 2 years? I can't seem to qualify because it's been less than 2 years as a rental. So that question is more so banks not qualifying for line of credit because the age of the business. It has nothing to do with your rental. Now, there's 2 schools of thoughts, and there's 2 ways to answer that question based on what I'm imagining in my head right now. The first part of the answer, I'm going to try to, a little spiky here. The first part of the question is it's because your business age, right? If you're LLC or a corporation, it's only been less than 2 years. Then banks are going to look at that and say, well, your company, your LLC has only been around less than 2 years. Fortunately, our underwriting guidelines or the minimum requirement is more than 2 years as far as the business age. That's one way to explain it. The second way to explain it is if you've only had this rental property for 2 years, if you're more so asking the question of, well, I don't have enough equity to be able to go get a HELOC, well, then in that case, you can also get a business line of credit. There's also other lenders that are very creative when it comes to these types of financing. So if it's in a LLC, if it's not in an LLC, then you can also get a personal line of credit to get started, at least so that you can get enough equity to jump ship into a HELOC later down the road. So I hope that's what you were asking. If you want to clarify or provide a follow-up question to that, you're more than welcome to explain.
And just as a reminder, guys, because we know a lot of the real answers, in terms of us being able to add value to you guys in the best way possible, a lot of times it requires us to ask a bit more questions about what's going on. So, if you guys want, feel free to email us with anything you guys are looking to do. Now, obviously, it would be a disservice if I didn't mention that we do have products that help individuals around the HELOC strategy and also real estate. If, for example, one of the things that I'm very excited to do with my coaching clients is we're actually tackling a new series on how to make money during the recession as a real estate investor. So if you guys have any questions or you're looking to get any more information, feel free to email us at info@thekwakbrothers.com. So Joel, if you want to type that into the chat box, feel free to message us, email us.
Well, it's in the link description down below.
It's also in the link description down below.
So you just need to go there. By the way, we are leaving a ton of resources for you guys because, as you can see, the economy is not doing so hot, and everyone's in a freak out mode, and everyone's at home right now. So you have time to check out some of the resources that we have. And also, just another reminder: be sure to subscribe and like this video. Like is for free; you don't have to pay anything. which is amazing. So go and turn that like button to blue.
You sounded like a Middle Eastern guy at the end there. It was, like, it was amazing. It's amazing.
That sounds more like Italian.
You click on the like button.
You know, with this hand right here.
Right,
okay.
exactly. All right. So we got a lot of real estate questions. So knee post. I love the name. You should play basketball and be a big man. All right. Knee post is saying, is selling a property a good thing right now? So that completely depends. Now, here's the trap that I want a lot of you guys to avoid in the world of real estate. You know, a lot of us, well, here's what they say, right? The real reason why the stock market and these markets tend to go horrible and they tend to plummet is not necessarily the event that happens, but more so of the fear, right? It's more so of the fear and the panic that causes this market to shift, right? Causes these markets to plummet. So what's going on a lot of times right now is they're seeing what's going on with the coronavirus. They're seeing what's going on with the stock market, and people just tend to stop. Yeah. Like they pause and they get frozen and they get paralyzed by fear. So a lot of times people don't want to do anything. And a lot of times when people don't want to do anything, that's when a lot of transactions stop. So for example, a lot of people are not interested in buying a home because during recessionary times, and again, there's tons of research to back that up, a lot of people tend to have their money and hold on to it. Matter of fact, during these times, that's the exact opposite of what you want to do. Now is the time when prices are low and things and everybody stopped and you're the only one in the room holding the cash. That's the time where you want to invest. But now, don't get it twisted. Invest smart. Because it is a recessionary times, it means you're more open to risk. So I always tell people I love recessionary times because those are the times where the real real estate investors who have been studying, who have been taking the training, who have been getting the coaching, this is where they really thrive, right? Now, in terms of asking your question, the market would say no, because a lot of people are not buying homes right now for the reason I just said. Now, does that mean that it's going to stop you from getting the price that you want? Not necessarily. Right? A lot of it, again, 90% of it is your ability to market the product. What product do you have? Do you have a good, realtor broker working with you? Do you have a good buyer's list? Whatever it may be. If it's a personal residence, obviously it's more prone to how good is your realtor, how good is your broker, et cetera, et cetera, et cetera. So again, the market doesn't dictate what you specifically are looking to do, right? 90% of it is your own ability. All right.
Absolutely. EM.
That's yours. So EM asked, what do you think about going back into real estate syndication once this virus blows over? A lot of owners could lose their properties under distress, and it could even out the playing field. All right. So let me talk about real estate syndications. There's a guy out there in the YouTube social media sphere.
More than YouTube.
Well, more than YouTube, right? But that's how I found him. In the YouTube and social media sphere that does a lot of syndications. And currently, he is bankrupt. He is facing bankruptcy. He has fired like over 80% of his staff. And let me say this. I've got a lot of friends that do real estate syndication. A lot of friends. They own hundreds and tens of millions of dollars worth of real estate. Right now, they are all struggling. Right.
Well, tell us what is a real estate.
So here's what a real estate syndication is. Right. So the act of syndication. Right. Like, what is a syndicate? Syndication pretty much means that you're raising money from other individuals and you're putting together in an entity that allows you to pretty much use money of the masses to do real estate deals, right? So in many forms that comes in the form of a PPM, which is a private placement memorandum. We've got your 506s, your 506Cs, your 506B, but pretty much you're syndicating. You're pooling the funds together to tackle larger real estate projects. Now, typically that means larger apartment complex deals. Now, if you're asking once this virus blows over, first off, I don't know when the virus is going to blow over. Right. So I don't know if that's 6 months from now, a year from now. We just don't know. What I do know, however, is that a lot of syndications do rely on bank financing. Just because, with owner financing, it's very hard to owner finance a $200, $300 million deal, or 200, 300 unit building because, well, if you're buying a 200, 300 unit building from a seller, chances are that seller also has a lot of investors that's attached, to that project as well. So, and I know right now that banks are getting tighter. They're looking to push so much more liquidity. Last time I checked, they're pumping $125 billion a day. right? I mean, it's the economic stimulus plan that's on the House floor right now is $2 trillion. I mean, you're talking massive amounts of numbers here. And I spoke with my buddy Michael today about, hey, we've never seen a time where monetary and fiscal policy is extremely over aggressive at the same time. So we don't know where this market's going to go just because we haven't seen this type of levels of over pumping of liquidity into the market. So for me, my partner Kevin says it all the time. He says you never want to be the first. You always want to be the first second, right? Because that first is so much exposure to liability, so much exposure to risk. So I would say, yes and no. I would focus more on finding the off-market opportunities for now and making sure you set up long-term financing with opportunities to increase equity very quickly.
Right.
As in, don't shop for cash flow right now.
Yeah.
All right. What else do we got?
We got Armand M. Armand M is asking about my house 6 months ago at 4.1% interest. Is it worth it, or would it be a good idea to refinance? So
why don't you take this one?
Yeah. So I mean, I created a whole entire video last week, or is it this week? I can't. This whole coronavirus thing has thrown off my calendar. I think I released a video this week about why you should never refinance. Period. I think refinance. Even if you're refinancing to a lower rate, and here's why, and I'll give you a little synopsis of the full video. I highly encourage you guys to watch the full video because it does a really good job illustrating it. But when you do refinance, whether it's on a rental property or your own residence, what you're doing is you're ultimately resetting the amortization clock. Now, some mortgage brokers like to argue with me saying, well, Sam, you don't have to reset the amortization clock. You can, if you made it 3 years into your mortgage, you can always refinance it and put it on a 27-year amortization. Well, it's fine and all dandy, but whatever you amortize or whatever you refinance to, what happens is you're going back to what's called front-loaded interest zone. A front-loaded interest zone is essentially when you start a new mortgage, okay, whether you refinance to a lower rate or higher rate, doesn't matter. Vast majority of your monthly payment is going towards interest payment. So if you go and refinance today, let's say your monthly payment is $1,000 a month, like $800 to $700 of that is going towards interest payment to the bank. And the rest, $200-300 is actually going down to pay down the principal. So if you made it 7 to 10 years into your mortgage, and that's usually and we're talking about a 30-year fixture, you make it to about 7 to 10-year mark on your mortgage. This is when you typically start to pick up more principal. That you want to be in that zone. You want to be in a zone where your monthly payment is going vastly more towards principal balance, not towards the interest payment. If you go and refinance at that point, what happens is all the progress you've made so far, gone. You're having to restart all over as far as bulk of your payment going towards your I digress. Interest payment, not principal payment. So I'm not a big fan of refinancing, even if it's a lower rate. And I know everybody is on this frenzy mode right now to refinance because there's this, again, last week we did this live. There's this perceived notion that the interest rate right now is low. Well, historically, it's low, looking at that long-term context. But right now, a lot of people think because the Federal Reserve dropped their interest rate last week to 0 to 0.25% as their target rate, it doesn't necessarily translate to the interest rates that we, the consumers, pay. Okay, so just because they dropped an entire 1%, doesn't mean that our mortgage rate and our refinance rate goes down as well. In fact, last week I explained that the banks have raised the marginal rate, which is the interest rate that they charge you on top of what they borrow from the Federal Reserve and the central banking system. So,
all right. So next question, we got Forrest. You got to calm down, man. You're looking like Bernie with the hands, right?
Like this millionaires, yeah.
Right, exactly. It's like, all right. So let's go on to Forrest Supernet. I'm just gonna call you Forrest Gump. So, how do you see the real estate market getting hit in 2020 and beyond?
Ooh,
so,
that's a good one.
So in my opinion, if you're talking about values decreasing, yes, like we're at a point in the real estate market right now where as of March of 2019, we've been on the longest bull market in the history of the United States. And typically when the money is so cheap and the rates are so low, the prices do tend to get up, right? And that's just basic supply and demand. You have more people in demand than the supply, So in terms of taking a hit, in terms of values, and yes, the values will go down. Now, if you're asking, where do I think it's going to get hit the most in terms of value? I think commercial properties.
Yeah, retail.
No, not retail. I'm actually thinking like apartments.
Apartment commercial.
Yep. So the reason being is because we've seen a giant shift in the capital markets as of the last 5 years of a lot of capital investing in real estate going towards multifamily. And that's fine. That's okay. And I get it. Multifamily has a lot of benefits, right, in terms of investing, right? It's got tax benefits, got a lot of beautiful things. However, it becomes a problem when you have so many different competitors looking to buy these apartment complexes and just they get overdriven in terms of price. So in terms of the value hit, I say apartments, and the values will go down in my opinion.
Well,
right?
what do you think about retail? Because obviously right now all the restaurants and bars, and not that I go to bars,
but I don't think it's gonna take that much of a hit. Let's be real, guys. The coronavirus is temporary. It's not something that's gonna last 2, 3, 4, 5, 6 years. Right. I mean, in my opinion, I think the timing of it is rather interesting, having it being an election year. But let's be real. It's temporary. The restaurants will get busy again. Right.
Yeah.
Now, granted, a lot of smaller businesses are closing. I read a statistic this morning that the store closings number is approaching 47,000 in terms of small businesses / retail businesses closing. 47,000. It's crazy because in 2019 we thought 9,000 was high. We thought 9,000. Now we're at 47,000. So but in terms of taking a hit, I don't know. I would disagree. I think there's always opportunities in real estate, no matter what. Multifamily wholesaling may go down, but and same with fix and flip. All those things might go down, but a lot of the other interesting acquisition strategies, such as short sales, subject twos, I think that's a tremendous opportunity.
Yeah. All right. So next question. Thank you, Forrest, for the question. Appreciate that.
Thank you, Forrest.
Yeah, Juan. And again, just a reminder for everybody, be sure to hit the like button because it does help get us more exposure. So if someone just scrolling up and down, if there's enough likes on this video, YouTube will actually bump it up and expose us to more people. So do please click like on that down below. Turn that to blue. Does help us a lot tremendously. So let's go ahead and address Juan Galt's question again. It says, do you think this COVID-19 driven manufactured hyper crisis reaction blows over after peak this summer? New drugs and treatment kick in, or will existing economic damage last for months into near year? Now, I'm not a medical professional, neither is Daniel, but
we look like some.
Yeah, right. Some of our cousins are. But in all reality, I don't know if I don't have an answer for when this virus will stop. If you asked me, my wish list, I hope it stops tomorrow, right? But as far as the economy, my opinion is I don't think it's ever going to look the same again.
Well, we got to. So we have to look at history. A lot of people think, well, this has never happened before. Yes and no, it has happened. If you
Spanish flu. Right.
Yeah. Well, if you actually look at what's going on right now compared to what happened in the late 1920s, there's a lot of similarities that's actually happening. Now, if you look at the last 3 economic downturns and economic quote unquote recessions, and again, a recession is nothing more than when a GDP goes on a downward trend for 2 or more quarters. It's really not that big of a deal as long as you yourself are financially responsible. You're saving money, you've got a reserve, and you're making good decisions and not putting everything on a credit card, you'll be okay, right? You will. But let me explain this. So the last 3 economic recessions have occurred in the same way, in the same pattern. And it's interestingly enough, now it's Corona, but 10, 12 years ago, it was something else. And before that, in the dot-com bubble, it was something else, right? Usually the way bear markets happen is typically you have an increase, right? You have a bull market that's been existing for a very long time. And in this case, as I already mentioned, as of March of 2019, we experienced, as the U.S. economy, the longest bull run in the history of our country's
existence. March
existence.
2020? You said 2019.
Yeah, no, it was 2019.
Oh, was it?
Yeah,
okay.
Yeah. It was as of last year. So we've gone a very long time, like a full year beyond our record. So we've got this very long uptick. And then people start wondering, it's been a long time since we've had a recession. There's got to be another one coming. So the uptick slows down just a little bit, right? Now, usually around that time, whether it's the coronavirus, something for some reason always happens, whether it's the panic of the investors from the long bull market or the coronavirus or the Spanish flu, if you go back 100 years or whatever it may be, right? There's always a dip. And then you've got investors who have the quote of buy the dip, right? You see on their Instagram, they quote Warren Buffett, right? Be fearful when others are greedy and be greedy when others are fearful. Yeah, I read that book too, right? So there is typically a little bit of an uptick, and that tick usually lasts about 3 to 6 months. And then the real recession happens, right? The real recession happens and everything just absolutely plummets, right? So I'm not a medical professional, neither is Sam, but I am willing to bet that this whole COVID-19 hysteria is going to be over in about 6 months. If I'm a betting man, I'm willing to bet the media is going to talk about something else. Because if we can be real for a second, right? I don't want to stray too much away from the topics tonight, but the real damage has been done economically.
Yeah.
The downturn, like the media hysteria, right? Like how powerful the media is, has allowed the economy to plummet, and the economy plummeting has hurt more people than the actual coronavirus.
Right. Yeah. I mean, there's compared to the seasonal flu, and again, I'm not downplaying the seriousness of the virus. You know, the virus does kill people, but flu, alcohol, like drunken driving, has killed more people last year. Definitely the economic impact, unfortunately, caused by fear and panic. I don't think it's gonna be ever the same. Okay, so let's move on to the next question.
So we got Lyson Dion said hello from London. Hello, right back at you. No, it's not the wrong country. Forrest M, that's all you, buddy.
Yeah, Forrest M. Is there any lender in California who provides HELOC for a rental property? Can you name a couple? So, I mean, most banks would do it. And I'll put it this way, and with this caveat into it, banks don't typically want to put a HELOC on a rental property if you're brand spanking new. And the reason why is HELOC is like a firecracker. You know, if you don't use it correctly in the right fashion, in the right context, you can do some serious damage. In fact, in 2008, when lenders were giving away like free money essentially before 2008, 2006 to 2008, you know, when we had this whole subprime crisis, you know, it was normal for us to see third or fourth position mortgages, and a lot of times those were HELOCs. So a lot of speculation as far as, you know, what happened 2006, 2008. Investors were buying properties using a HELOC as a down payment, and they were putting HELOCs on rental properties and then going and take that HELOC and buying another. Banks don't want to see that again. So right now, what's going on is the banks are giving out HELOCs. They're still doing it. It's just like they're super strict now. They're doing 60 to 75% loan to value. Some banks are looking at 50% loan to value if you're looking to put a HELOC on a rental property. They also want to see your balance sheet, make sure that you have a ton of assets, you have a ton of liquidity, meaning that you've done your research, you have experience, you have other rental properties. In case there's a default, meaning you stop paying, there's some ways that banks know that you're going to pay them somehow. Okay. So when it comes to a HELOC on a rental property, it can be done. It's not impossible. I know there's certain people in the real estate investing community like to say, oh, it's impossible to get a HELOC on a rental property. Simply not true. It's just harder and stricter. And you have to be seasoned, meaning you have to be more experienced in this game. So where can you, the question is, where can you get a HELOC? Pretty much any bank will do it. I know, to name one, a credit union, PenFed, I believe, does rental property. A lot of the local credit unions and community banks are less strict when it comes to giving out HELOC on a rental property. So I hope that gives you a little tip on where to go look for a HELOC on a rental property.
Lyson Dion said, I hope this blows over. I need to make money. Yeah, I mean, we all do.
Yeah,
right?
Absolutely.
But here's what I'll say, because I know there's another HELOC question right after that.
Yeah.
But here's what I will say. Jim Rohn said it perfectly when it says, don't wish for a better wind. Wish for the wisdom to set a better sail, that no matter where the wind blows, you always go the direction you're wanting to go. So, you know, I'm literally just talking with my one-on-one coaching clients. And again, we're starting this new series on how to make money during the recession. And by the way, guys, like I already mentioned it about 20 minutes ago, but it would be a disservice to you guys if we didn't mention, we do offer, you know, programs and products that do help you guys during these times. Right. And we're very knowledgeable and sensible about what's going on right now. Yeah. And we want people to be prepared, be proactive, and not reactive. Yeah. So again, guys, you know, we got the email info@Kwak Brothers. If you have any questions or any inquiries, or you're just wanting more information, that's it. Just information. Send us an email. We'll be more than happy to reply. Yeah. And another thing I also want to ask you guys is go and comment down below. How are you guys surviving the coronavirus pandemic, this quarantine lockdown? I saw the other day, people were jogging and riding bicycles by Lake Michigan, which is, you know, the lake in Chicago, lake by Chicago. And I'm like,
so much for the lockdown, right? People are still walking around and doing stuff outdoors, which is kind of interesting. So go and comment down below. How are you surviving the coronavirus? Are you catching up on your favorite Netflix show? What are you guys doing?
Yeah.
I'd love to hear about
Sam, there's a question by Felton Thornton.
Felton Thornton, let's go. So what if I have already had my mortgage put on back end and had a natural disaster and was out of residence for a year? How would that work for my HELOC? So my follow-up question to you, Felton, is, well, maybe I have to reread that question, but my question to you is, your mortgage was put on the back end. Are you looking to get a new HELOC, or is this an existing HELOC? Because guys, it's kind of interesting. I know when it comes to the language, we like to separate the mortgage and the HELOC. HELOC is a type of a mortgage. A mortgage is nothing more than an instrument that collateralizes your real estate, your real property, to a promissory note. A HELOC, it's an additional rider, additional policy that just allows you to have a revolving access to the equity. That's all it is. So when we talk about a mortgage, a HELOC can also be a mortgage. It is a mortgage. Right. It's just, there is just a revolving line of credit that's attached.
So Lyson said, how is it over there for you? It's good.
Yeah.
Next one. Knee post. I'm a female, but thanks for liking name. Oh, I'm so sorry. I apologize for that. Oops. Not the first time I made that mistake. Here's my thought. Sell one of our rental properties, has 100,000 in positive equity. Thinking about using money for other investments. And then she continues, other investments equals real estate. Yeah, 100%. Sure. Absolutely. And like I said, if you need any assistance with, how to best use that money for real estate, I've been saying, and Sam can say it, right? I don't know how long you guys have been following us, but literally for the last 3 years, I've been saying 2020. It's the year it's going to happen. And here are the opportunities that's going to come by. So I literally have actually been preparing for the recession the last 3 years. And I'm not going to lie to you guys, I haven't bought an apartment complex the last 3 years for that exact reason. And the last 3 years, a lot of people laughed at me. Mm-hmm. They're like, listen, man, like, you're on YouTube, you're like, teaching all the real estate stuff, but you're not acquiring apartment buildings. Well, there's a reason, right? Like, the best investors are good at buying, and the great investors know when to buy, right? They know when to buy. They know when to buy well. Mm-hmm. So if you guys need any assistance, I'd be more than happy to give away what I've been working on for the last 3 years. Now, obviously, there's things I will have to restrict because there's people who have paid for that information. Yeah. But if you guys want to email me or you want to give me a call, email info@the Brothers. Mm-hmm. Myself or Joel or somebody else on our team, we'd be more than happy to assist you and helping you be better stewards and make better decisions, especially right now when there's so much volatility. Yeah. Next question is Pinball Steve is asking, was my question not appropriate? Did you delete it? I don't know. I don't see the previous question. What may have happened is YouTube automatically deletes or holds any swear word or cuss words. We are a very PG YouTube channel. If you in case you didn't notice. Well, his question actually, if you scroll down further. Oh, it's there. Yeah. It's there. Okay. Got it. Okay. Yeah. So yeah, Pinball Steve, let's go and answer your question because to be fair, you typed it first and then you had to come back. So Pinball Steve says, I was just under contract for my first home using Maine State Housing FHA, 3% loan with only 7% down, only make $40,000 a year. House was priced higher due to the seller's market. I'm worried that the economy will cause housing value to fall and I'll be underwater. Should I put off buying until later in year or next year? Honestly, this is something that I've been warning everybody about for a long time. The whole FHA. I'm not a big fan, to be honest. I'll be real honest and I'll be brutally honest because I like to give answers that you need to hear, not what you want to hear. But I think a lot of people are gonna, when the housing value falls, I think people who have FHA are going to be not in the good position. And what do you think, Daniel? Yeah, so this is a question that pertains more to real estate in the market. So, if you want to chime in, you can. But here are my thoughts. Right, whenever you have a scenario where your starting position, you have very little equity, and your monthly payment is still a good amount, right? Because I know with FHA, with different, there's stuff like PMI, right? There's stuff that we have to keep in mind. Private mortgage insurance. But whenever you have a situation where you have just starting out, you have very little equity. And you have a market in which the values are super duper high. Yeah, you're in trouble. Like, that is not a good look, And I'll say the same thing about, and I'm glad you actually brought that up, Sam, because Sam and I actually feel the same way about FHA. Yeah, right. I feel the same way about FHA as I do the BRRRR strategy. Both are not bad things. right? Like, please do not hear me say that I don't like the guys. I love the BRRRR strategy. I think it's a phenomenal way for your average Mr. or Mrs. Jones investor to scale their real estate portfolio at a reasonable rate. However, you can't do that when you have a very long bull market that's about to crash. Like you can't, right? You can't do it in a market that has a very high real estate value. It just doesn't work. There's no room to go. There isn't. You're like drawing from an empty well. So I always say, listen, if you're going to be in a position where you're going to have very little equity, because the BRRRR strategy is a strategy where you do not have a lot of equity, especially after you refinance. And we're in a stage, right? And it's human nature. We want to refinance as much as we possibly can, right? We want the money now. That's what, especially Americans, right? And I guess we have a different perspective because we've lived in a different country before, right? But, like everybody wants it now, right? They're not looking for the long term, So my recommendation is if you're going to do something like FHA financing, I don't care if it's for residential or if it's for investment, or you're looking to do the BRRRR strategy, do it right after an economic downturn. You know what would have been a perfect time to do the BRRRR strategy? 2014, right? 2013, 14, and 15, you're kind of pushing it because really you've got about 6 years after that. And obviously hindsight's 2020, but I'm just giving you guys a little example, right? A simulation, so to speak. But 2014, you've got 6 years to build equity, to pay down your mortgage, use our HELOC strategy, right? That's why we have it here. So in my opinion, you said, should I buy this year or next year? Neither. You shouldn't do either of those options because I'm willing to bet, economically speaking, next year might be worse, if not the same as this year. So, hold off, right? And in my opinion, I think it might start when we don't know when the market's going to start picking back up. But when it does, that's the time to do it, in my opinion.
Yeah. And we're not like, I just want to make sure that everyone understands that we're not like the doomsayer, right? We're like, oh my gosh, like recession is going to kill everybody. There's going to be an asteroid that's going to strike the earth and we're all going to die. That's not what we're trying to be real as much as possible because it's better to be safe than to like overconfidently go on and get aggressive with your investment decisions. And again, these are all of our opinions based on our research, our observation, some of the case studies that we've seen all the way through the history, and we spend a lot of time making sure that we get the information right. In fact, we got this whole 2020. If there is a recession, we have to wait until there's a quote unquote real recession. If there is a real recession this year, we were correct based on last year's prediction.
Okay, so Steve Fernandez has a question. You got to scroll up a little bit because
we missed that.
We went to.
I just did a VA refi 6 months ago, or 6 months at 3% with no money down, and now rates are down. Should I do a refi at 2.75% right now? Now, my question, Steve, is were you quoted the 2.75%? Because if you weren't quoted and you made that assumption because the Federal Reserve has dropped the rates, it may be a false assumption. VA loans is an interesting case because there's a lot of protection on VA loans because it's for veterans and all the people have that serve. Which, by the way, Steve. Appreciate you serving our country. So VA loans do have certain protection, but I have a lot of suspicions on VA loans like the FHA because what we've seen in 2008, people bought homes in 2007, 2006 with VA loans, and I still saw people in trouble with the VA loan. Although VA loan it's a little better because you don't have the PMI. There's reduction in closing costs. There's a lot of benefits. I've yet to use my VA loan benefit. So my question to you is, were you quoted the 2.75% by a banker or lender, or is that just an assumption that you drew upon based on the fact that the Federal Reserve has dropped the rates? So that's just my follow-up question to you, Steve.
Yeah. All right, what's next? Let's see. Who would you go to in Utah for a HELOC? And that's asked by Hugh Smith.
I'm sorry. I'm just reading through the comments here.
No, you're good.
Okay, so like I was saying earlier with the gentleman that was asking about California, try your local community bank and credit union first. First of all, I love my credit union. I do my community credit union banking with not a local one, but a national presence. It's for the military folks, Navy Federal. I love it. It's great. They have special programs and all sorts of good stuff. So I would first go with your local community bank and credit union they tend to have better programs and less restrictions.
Right. Okay, let's move on. So JB, I'm going to assume you're Jordan Belfort. Scheduled to close on an income property in 2 weeks. Should I back out due to a potential crash? I mean, so I already kind of spoke about this. You know, here's what I would encourage, JB. Don't let your investing career be driven by fear. I can name you plenty of people who made money during a crash. A lot of my mentors that I very much respect and look up to, they actually made a bulk of their money and created a bulk of their success during 08 and 09 and 2010 and during 2000, 2001, 2003, right? So don't let it be driven by fear. You know, if it's a good deal, right? I mean, if it's a good deal, then do it. You should still do it.
Yeah.
You know, now if you have questions on whether it's a good deal or not, feel free to email me. I'll be more than happy to take a look at that deal for you and give you my thoughts. Now, obviously, I can't do that right now just because, you know, we have a lot of questions that we got to get to. But if you want to email me at info@thekwakbrothers.com, if you scroll through the comments, I think Joel graciously typed that in there for us. And it's also the link in the description below. So if you want to give me details on that deal, I'd be more than happy to look at it, you know. But in terms of, you know, the market and not doing deals because of a potential crash, I mean, don't worry about that, right? If it's a good deal, you've got a good team, right? It doesn't matter what the market's doing. You know, 99% of the time, you'll be okay. Unless something crazy happens, like extremely drastic, where we like switch to the digital currency, like is what they're talking about. You won't, there's not a whole lot that you're going to have to worry about. So again, email me, info@Kwak Brothers. I'll look for you. Just say in the subject line that I asked for you in the live or something related to those lines.
Okay, so next question is, where can you get a HELOC in it for a rental property? Otherwise, it's just an asset-based line of credit. I mean, asset-based line of credit, HELOC for rental, essentially the same thing. It's just collateralizing your real estate, your security into a revolving line of credit. So where can you get it? Well, again, local credit unions, community banks tend to be better options, in my opinion. Right now, a lot of community banks are struggling because, you know, their bankers are working at home. You know, I said this earlier in the show that a lot of banks are slow with the loan application. So I would first try to go with a local credit union, community banks, establish relationships with them. I think that's my first move from there. Looking to get a new HELOC, well, it depends on what you're looking for, right? There are different types of HELOCs that are out there. So if you can follow up with that, that'd be great. Where can I get a good CL in Chicago? I'm not sure what CL stands for. Is that
Southside
credit line? Is that what it is? I don't know. CL could also mean Craigslist. You know, right? Where can you get a good Craigslist? Yeah, I don't know. Min free 25. If you can,
Mine free. It's mine free.
Mine free.
Yeah, he's from the South Side.
Mine free 25. If you can go and explain that, that'd be great.
Right. Where are you from, man? Inglewood?
Yeah, tell us street names. We'll tell.
Dude, we're from Chicago. So, he said credit line. He clarified.
Credit line. Okay, where can you get a credit line in Chicago? I mean, I guess. I mean, what are you looking to use it for, right? That'd be my follow-up question to that. So let's Mind free. Let's go and if you can go and explain that question a bit more, that'd be great. Real estate in Las Vegas, Nevada, Las Vegas. Do you think it's a good market for investment properties? Wow.
Yeah, so Las Vegas has been a very hot topic. It's been a pinpoint of a lot of attraction for a lot of investors for the last 3 years. You know, so do I think it's a good market? Well, I mean, it depends. What are you looking to do? You know, are you looking to do single families? Are you looking to do apartments? Are you looking to do short sales? You know, it just really does depend on what you're looking to do. Now, I'm going to go ahead and define a good real estate market as you've got a good population increase, right? And if you guys want to write this stuff down, you're more than welcome to. But in my opinion, what defines as a good real estate market is, number one, what is the rental trend, right? Is the rental income going up? Is the market on the uptick? Is there, more importantly, a population increase than a decrease? And what is the quality of that population? Are these individuals that have income coming in? What is the average median income for your average renter? What are your employers? And my favorite is, what's the supply and demand factor? Meaning that, is there a lot of available units for sale, right? Is there a lot of units being rehabbed? Because if you think Las Vegas is a great market, that means typically other people may as well. Now, having said that, there's very few micro markets where there's not a lot of things, there's not a lot where people know about. Mm-hmm. And that's what I like to call the market of the decade. So, for example, I have a market of the decade. I'm not going to tell you where it is, obviously, right? Because it's going to be available to thousands of people, and it'd be a disservice to my investors who are investing money with my company, Miati Partners, right? But it is a deal of a decade, right? It absolutely is. It's got everything lined up. It's perfect, right? But in terms of Las Vegas, you know, a lot of people are targeting Las Vegas. So if you're looking to do a deal in Las Vegas, probably a lot of people are. What I would do, however, to answer that question for yourself, because I love giving the tools and means to actually have you answer your own questions as opposed to me just giving you the answer. I would actually look up and research how many units and how often are units being purchased by other investors in Las Vegas, and compare it with other hot markets such as Phoenix, Arizona, Dallas, Houston. Houston's a very hot market right now. And I would compare. I would compare it to how does it fare against these other cities?
Yeah. And just a quick reminder for everybody: go ahead and like the video if you guys are enjoying the show so far. If you guys are getting, your questions answered and you guys enjoy the show, like and subscribe to our channel. We talk a lot about landlording, real estate investing, paying down your mortgage, pretty much anything that has to do with real estate. I will unveil some of the things that we're working on right now. In the next 2 months, April, May, we're going to be focusing on how to buy rental properties, because I know the recession, or at least we think there's going to be one, but
there is going to be one sooner or later.
It's going to happen.
Right. So that's why with a lot of our students, a lot of our coaching clients, that's what we're covering.
The key is you have to understand how to buy when the opportunity comes, right? So, understanding the context, when, where, how. So the next 2 months from April, May, in fact, we have a whole 6-month schedule planned out for our YouTube channel. April, May, we're going to focus on how to buy your next rental property. If you don't have any rental property, great. Great place to start is our channel. If you're looking to scale your rental property, perfect. June and July, we're going to focus on how to manage those properties, right? So now that we helped you get rental properties, we can help you how to manage, put it on an autopilot so you can keep on buying rental properties and increase your cash flow, create your passive income lifestyle. Right. And then who knows after that, right? August and September, we're still working on some of the content layout. But in order to get those content, you do have to subscribe, as well as like this video, because you want to grow your passive income.
Right.
Okay?
All right. Let's go. Let's keep going. Right. So Dennis said, I'm working on things that have been on the back burner to add value to my properties. When this is over, I will have gems ready to go. Awesome, man. Good for you. Oh, and speaking of Dennis, right? So we actually do have a podcast that we just released. Go search the Kwak Brothers on Spotify. Yeah. We got a podcast on landlording automated.
Yep.
Right. It has to do with the software that we will be releasing soon.
Well, not just the software, but it has,
if you're landlording in general.
Yeah. If you're a landlord, you want to automate your properties and your passive income. It's the podcast.
And then we also got the first deal experience, where we interview successful real estate investors, and they share the story of how they did their first deal. Right. So go ahead and check that out. The Kwak Brothers on Spotify, iTunes.
Yeah. It's, Spotify, iTunes, Stitcher, SoundCloud. It's also on Google Play. So
yeah. All right, go ahead. Let's go ahead and continue. Pinball Steve says, so I have to save up until I have at least 20% down. Not necessarily, right? So all I'm saying is do strategies, acquire good cash flowing rental properties. Yeah. And make sure your equity is good and you're seeing the bigger picture, right? So like I said, it depends, right? Yeah. Do I think you should put a good chunk of money down right now? Yes and no, right? If you're doing owner financing and you're not attached to a bank, then yeah, go ahead, go put 30% down. Yeah. But if you're looking to put liquidity, in a bank financing situation, well, I don't know how good that liquidity is going to be. You're not necessarily going to get your best bang for your buck in terms of how the value is in relation to the cash that you put, right? And a great video to watch in relation to that is one that's called Warren Buffett quotes an investment equation from 600 BC, right? So it's a concept that I learned watching Warren Buffett, just myself personally, but it does depend, right? It also depends on the strategy, et cetera, et cetera. And Pinball Steve, you've got a lot of questions. So again, feel free to email us. I'd be more than happy to kind of have more of a conversation with you to kind of get deeper, right?
Absolutely. All right,
so
let's keep on.
Jeanette asked, borrow from 401k to pay down instead of a HELOC. Good idea or no? That's all you.
Well, when you borrow from a 401k, there's ups and downs. Let me talk about the up first. The up is you get to pay your 401k interest. So any interest that you would have paid to the bank, now you're paying towards your 401k, which I believe the interest rate right now, and I don't want to quote anything, and you may have to ask your HR or whoever is your administrator of the 401k. I think the last time I checked it was like prime plus 1%. I think that's the going rate. Again, you'd have to ask your administrator. But the downside is that you lose. Either plan loses liquidity, meaning that if you go and borrow from 401k and you attack the mortgage, which you essentially shifted the principal balance of your mortgage into a 401k. The benefit of that is now I talked about the positive. The negative is you don't have access to the equity, meaning when emergencies come around or a rainy day comes around, you don't have access to the cash. Or if you're into real estate investing, you want to be able to get access to cash to be able to buy something. You just don't have that. So maybe doing both might be a sound plan. I just been more so a fan of focus on one thing. If you're gonna pay off your mortgage with a HELOC, just focus on that. You want to invest in your 401k and stocks and bonds and mutual funds, focus on that. Just focus on one strategy that aligns with your future financial goals and what your lifestyle goals are going to be. Okay.
All right. Next question is Forrest M. All right. So go up to Forrest M. I think he posted around 7:48 p.m.
Can't find any lenders who does HELOC for a rental property. My rental is a single family house in California. Can you name a couple of lenders who still offer HELOC on rentals? Well, I don't know if I have any specific names, to be honest with you, Forrest. Again, my best bet for you to do is go to your local credit union and community bank. The best bet. Yeah. Okay. That's what I was starting. If they don't have any of the HELOC or they're not willing to do it, then move up to a more of a national level banks.
Let's continue. So Nismo G35SLVR. He asked, would you recommend buying a rental property now? I feel like maybe purchasing a non-performing asset as those tenants might not be able to pay. I mean, do you go in there asking those questions before? So I mean, it like I said, I feel like every answer has been it depends, because that's true, right? Every single answer to real estate, 99% of the time, is it depends. So depending on what you buy and where you buy it. Now, I know a lot of landlords right now are very afraid of what's going to happen if their tenants don't pay rent, right? Now, if you're asking me, should you buy a rental this month or next month? Probably not, right? Because the closing is going to it's just going to be an absolute nightmare. Right? Just things are slowing down because of this virus, and that's fine, right? That's nothing that nobody's done. No one is to blame, right? So, if I were you, I would focus right now doing exactly actually what I'm doing, which is focusing on learning, focusing on building relationships. And, in the last year or so, Sam and I have hired 3 different coaches, right, that help us with different aspects of business, whether it's investing, whatever it may be.
Which, by the way, let me point out something real quick here. If you want to be good at something, go talk to someone who's already doing it and they're really good at it, and pay them to teach you. I don't know what's up with some, and this might be a rant here, but a lot of people have problem with teaching or paying someone to teach them how to do stuff, right? I think that's what separates people who are really successful versus people who are still kind of in that beginner zone. I don't care if you pay us, you pay somebody, doesn't matter. Go pay somebody that's good at what you want to be good at, and have them teach you the art.
Yeah, I mean, you either pay for the education here or you pay for it out there, right? The cost to pay it out there is a lot more expensive. So yeah, there is that fear of tenants not paying rent. So I mean, if I were you, I would just focus the next 3 or 4 months really on learning what's going to happen with the recession. I mean, my coaching clients and I are having a field day with, hey, like, what are the opportunities? And we're happy. Like, rest of the world's like, oh my gosh, they have money. We're actually very happy, right? Like, we're super excited. All right. Next question. Thank you, by the way, Nismo G35SLRV. Dennis said, a tip when this real estate market gets better, do not overbid on property. Yeah, 100%. Don't overpay, don't over leverage, right? These are lessons that are universally, no matter what decade you're investing in. True. All right, TJ, still need to study up on what HELOC is and how to use it. I've seen some videos about it. Subscribe to our YouTube channel.
Yeah, there's plenty of videos on that.
This guy does so many videos just on HELOC. It's amazing.
Mine325, our Southside brothers, saying, can you recommend a good Mason tuck pointing for multi-unit area Chicago side? Yeah, send me an email. I actually know a guy that did tuck pointing for one of my Chicago properties many years ago. Now, what sucks about Chicago and with Mason and tuck pointing is that you need to pull a permit, especially if it's a code violation, which, by the way, if you need to pull a permit, it's expensive, especially if you need to hire a permit expediter, which, yes, there's a thing. So if you need a Mason tuck point, send me an email and I'll be more than happy to point you in the right direction. And I use this guy.
Let's keep going.
JB, my down payment will be from my
Yes.
HELOC, and fear may get called to turn into a HELOC loan. Yeah, I'm not a big fan of using a HELOC for a down payment at all. Maybe during a time where the market's down and all the price of asset is low. But
no,
even
you
then,
should never do it.
Even then, like here's the problem. That's what happened in 2008, right? People were using debt to get into more debt. This is actually something that I would agree with Dave Ramsey is that you should never use debt to be able to get into more debt. So not a good idea. If you're gonna buy real estate using a HELOC, just use the whole thing to make the purchase price happen, not to get financing on it.
Yeah.
Okay.
You know what? Let's do this. You know, the comments. Everybody can read the comments in the chat box. Let's go ahead because right now it's 8:07. We only got about 5 minutes. Why don't we only take care of the questions for now, and let's just go rapid fire.
Let's go rapid fire.
Right,
yeah,
let's go rapid
one or
fire.
two questions.
Yeah,
or 1 or 2 sentences per questions.
Yep. Go ahead, Sammy.
Where were we? I lost track here. Was it outside of local economic collapse? Rates will probably remain historically low for several years, if not long.
Just go to the next one.
My bet is 0 for a long time. Steve Fernandez just did VA. Oh wait, no, we did that. Yeah, we just did that.
Okay.
Dave Ramsey said the same thing. Yep. If you have the holding costs for 4 months. Oh yeah.
Yeah. Gosh dang.
I'm sorry. Is a residential foreclosure different from an investment foreclosure? No. The real question you should be asking is my state a non-judicial or judicial state? Depending on what it is, the process of foreclosure may be different. Study up on that. Non-judicial versus
so Mark
judicial
Branch
state.
asked, what happens if you default on a HELOC?
What happens if you default? I mean, it's the same thing as a mortgage default. They're gonna send you a notice of default multiple times, depending on how fast the banks are gonna move and how the climate of again non-judicial versus judicial states. There's different process to it. It's gonna be the same thing. They're gonna continue sending you notice.
So JK asked, how do you handle tenants that can't pay due to current circumstances? So we did a video today with my real estate attorney, who's also a landlord. So again, subscribe, stay in tune for that. Big thing, in my opinion, is just communication, right? Work with the tenant. And if they're horrible, then, watch the video. You'll see.
Yeah. Oh, I'll give you my quick 1 sentence take. Give them a payment plan and waive the late fee.
Right.
Right.
I mean, my attorney said prorate it.
Right. Prorate the rents.
Do it on the back end. Negotiate with them. Take it out of their security deposit. Whatever you got to do.
Yeah. Okay. Machine. I don't know what that is. Machines don't like. They did it back in the day.
That's just a comment. That's not a question.
Okay. Is it hard to get refinanced now? Yes and no. Yes, in a way that I think you can speak on it. Banks are trying to get more tighter. Second is just they're slower.
They're tighter, but they talk about the interest rate. They don't talk a whole lot about the reserve requirement, which that is the #1 indicator for banks wanting to increase their level of liquidity.
Yeah. I'm not in America, but just asking your opinion. Thank you. Yeah, refinance is slower because people are just going nuts.
So what benefits Corona Rescue Program passed by Congress provide on rental properties, such as mortgage payment freeze? I'm not going to lie, as much as we are experts in this field, I think we'll just have to see.
There's case studies I've been reading that banks are offering mortgage freezes for 2 months, and they just put it in the back end in the principal balance, or they just shift the amortization schedule so that your payoff date is 2 months or 3 months out. So it is happening. Caveat emptor when buying in U.S. cities. Oh, is he responding? Is that?
I think so. I think that's just a comment. Good on rental property or not? I mean, yeah, I think so. Obviously, whenever there's an economic stimulus, it puts more money in the hands of our tenants. They're able to pay. Oh, there we go. Okay, so I'm closing soon on a HELOC on my primary home. Currently own a rental also and looking to acquire a second home. Should I use a HELOC to pay down the rental or use a down payment on the second home?
Oh, okay. So this is an easy one to answer. Just focus on paying down your mortgage. Is the second home for you just live in, or is it an actual rental property? And I've really never understood that. Maybe I will, maybe when I turn like 50 or 60. But like buying a second home just to live there for seasonally, I don't know if that ever makes sense financially. But yeah, I would focus on just paying off your mortgage as much as possible, especially with the climate right now.
All right. So Juan Galt asks, is your friend still able to offer the hedge fund business lines credit reference earlier this year for real estate investors? Yeah, I believe he is. So Melvin at Maj Capital. One of my best friends, Melvin Johnson. Okay, Jonathan asked, do you have a memorandum of purchase and sale agreement available? So, I mean, yeah, I do. I have templates, but I can't because I'm not a legal professional.
Yeah.
So, and here's a big thing. I don't even know what state you're doing business in, right? So, whenever somebody asks me for, hey, do you have like a real estate purchase contract, or do you have something available for me to look at? It's very, for me, it hurts you more than it does help you, because we all do business in different states.
Okay, Steve Fernandez, VA loan, I was quoted 2.75%. So my next question to you is, how far are you into your current mortgage? If you're in more than 5 to 7 years, if you're more than that, I would not. Yeah. Even then, if you refinance now, it's going to take forever. Right. Yeah, I'm not a big fan of refinancing. I'm just not. You know, I just stick to it, pay it off, and be done. And especially if you're using our strategy.
Yeah. It's Mind Free 25 as, what do you think about billboards? I want one. So here's what I think. You know, I think between Sam and I'm more of the investing wing, and Sam is a lot of the HELOC wing. Here's my opinion. I have a lot of young people, right, ask me this question, especially the ones in their 20s, and that's fine because they just want to know. But they ask, should I invest in this? Should I invest in that? Here's what I think. Pick one thing,
right,
and be really good at it.
Yes,
right. Like, be really, really good at it. That's my recommendation.
There's a saying, right? Jack of all trades, master of none. Right.
Yeah, and
you don't want to be that.
And Mind Free. So since you're local, email us at info@Kwak Brothers. We actually do host a local meetup that I host along with Sam and Joel and Ricky. So I think that'd be a great resource for you.
Mark Branch is asking, what are HELOCs mainly used for? I mean, honestly, anything. It works just like a credit card. That is attached to the to your equity. A lot of people use it traditionally for home repairs and improvement. Yes, that can be used that way. My favorite way, again, has been just paying off your mortgage and using it as more of a to balance your cash flow.
Right.
Okay. Is CMG still providing all-in-one loan? Yes, absolutely they are. It's just slower right now. Too many applications coming in, but it is happening.
Last one. How have you guys been doing on your Airbnb? So last week I had 5 or 6 cancellations. So I still had a decent payout. But you know, and I don't know what I haven't seen any more cancellations beyond what happened last week. So I think I'm okay now. But I mean, I don't know if you've been following what's happening with Airbnb, but they officially announced that they're completely refunding everyone, and they're pretty much just screwing over the hosts.
Yeah, it's not good.
Which that's fine. I'm sure their hands are tied, and you know, it's tough. But it sucks for guys like us who use it as an investment tool and use it as a hospitality business. Great show, guys. Do it again soon.
Well, if you guys love what we do here, this is actually what we do on a weekly basis for coaching students. We do this. We spend a lot of time with our students. We love our students. And if you want us to do like a monthly thing, we can. We'll see what we can do. But we dedicate a lot of our evening times to our students. Tuesday nights, usually I take calls for our HELOC strategy guys, and Monday Daniel does real estate.
And again, guys, it's, you know, right now is not the time and place for us to, you know, pitch anything or anything like that. But I will say, you know, like a lot of the stuff that we're working on right now, you know, Sam on his side and especially me on my side with real estate opportunities that's coming with the recession. You know, we're talking about some great stuff, and it's ways for people to really make money, and there's a ton of value. So again, if you guys have any inquiries or interest on that, all we're going to be doing, guys, is just information.
Right.
So email us at info@Kwak Brothers, you know, asking for more, and that's all it is. We'll set up a call. There's no heavy decision making. We're not going to pressure you. I mean, we do great whether you email us or not. So, you know, we appreciate you guys. And again, if you guys like this, give us a thumbs up. You know, it really does help us out a lot in terms of being able to reach people.
Absolutely. Yeah, so just to remind you guys, we're gonna go and wrap up the show today. We'll probably, I don't know if we're gonna want to do next week. We'll see. If you guys love what we did here, be sure to give us a thumbs up, and if you like the content that we create content about landlording, buying rental properties, creating cash flow, and property management. Be sure to subscribe more if you guys want your property management automated, as well as get more properties on your belt. I guess we'll take one more question. Which one of you is older? Well, go and comment down. Take a guess.
Take a guess. There's one. I'll give you a hint. The one who is physically older is not mentally older.
Okay. All right.
See, I just answered the question based on his reaction.
This reminds me of if you guys seen who's that? Chris Cuomo and Andrew Cuomo. And by the way, if you guys, Chris Cuomo is like the anchor for CNN, I think. and Andrew Cuomo, they're brothers.
Oh my gosh, are you talking about the video that went viral?
Yeah, I
haven't seen it.
on that.
What do they do?
No, it was literally Andrew Cuomo, who's the governor of New York, right? I mean, he's serious business. And Chris, they're like talking about like who's gonna beat each other on basketball. Like,
what?
And then what? Yeah, like who like who like which Cuomo Andrew or Chris, like which mom likes more?
Oh my
god, funny.
How insecure do you have to be like, oh, mom loves me? Oh my god. You're talking basketball,
and they were speaking like Italian in the middle,
Lord.
like it was so funny.
Really? Wow. Well, when it comes to basketball, I mean, come on, that's not even a question.
Yeah.
Well,
so go ahead and comment down below. Who do you think is older, and by how maybe we should do a little contest.
Yeah.
If you get Vito is asking, your coaching program is the best. Well, thank you. Appreciate that. That is awesome. All right, guys, let's go and wrap up the call.
Yeah.
Appreciate and love all of you guys. We pray and hope that you guys are safe, that there's a lot of people who lost their jobs right now, and we pray for them. We Godspeed in figuring out that situation. If there's any way we can help you, please reach out.
Let us know, and use the information that we're giving you guys. Spread it, right? Because there's a lot of people who could use this information right now to help with their finances, right?
Absolutely.
I mean, I say it all the time. Now is the time where you're going to pay off your debt. You do not want to go into a recession very heavy in debt.
Right.
So I always say now is the time. So spread the word, guys. That's all we ask. But thank you, guys.
Appreciate it. Yep.
Have a good night.
Yeah. We'll see you guys in another video. Take care.
All right.